Dorothy had been saving that money for 11 years. Every month she put a little aside, a little from her pension, a little from her social security. She kept it in a separate account and she never touched it. Then her furnace broke down in January. She needed a new one, fast. She called her son, told him what was happening, and he sent her $12,000 to help cover the cost. Dorothy did not think twice about it. She took the cash to her bank, the same bank she had used for 26 years, and she deposited it. 2 days later, she got a call from her son asking if everything was okay. She said, "Yes, why do you ask?" He said, "Because the bank just flagged your account for a federal report and nobody told you it was coming." That is where most people make the mistake that turns a completely legal deposit into a federal problem. And today, I'm going to make sure you are never in that position. Because the rule itself is not the danger. What people do when they find out about the rule is the danger. And I am going to explain exactly what I mean. Before we go any further, I want you to drop a comment right now. Tell me how old you are and what city or state you are watching from. That helps me understand who needs this information most and what to cover next. Go ahead and comment, then keep watching. The first thing you need to understand is what actually triggers a federal report. Under a law called the Bank Secrecy Act, every bank in the United States is required to file a report with the federal government anytime a customer makes a cash transaction that exceeds $10,000. This report is called a currency transaction report. Your bank files it automatically. You do not sign it, you do not see it. You probably will not even know it happened. The report goes to a bureau inside the U.S. Treasury Department called the Financial Crimes Enforcement Network, not the IRS, the Treasury. And here is the most important thing I can tell you about that report. It is not an accusation. It is not an audit. It is not a red flag on your account. It is routine paperwork that gets filed millions of times every year, and the vast majority of those reports go absolutely nowhere. No one calls you, no one shows up at your door, your account stays open, and your life continues. Dorothy's deposit triggered one of these reports. That is not what hurt her. What hurt her was what she did next. Because her neighbor had told her to break up the deposit into smaller amounts to avoid the report, and that advice almost destroyed her. The second thing you need to understand is the one decision that turns legal money into a federal crime. When most people hear about the $10,000 rule for the first time, they have the same instinct. They think if 10,000 triggers a report, I will just deposit 9,000. Or they think they will split it up and deposit a little bit over a few days. That instinct has a name. It is called structuring. And under federal law, it is a crime. Not a fine, not a warning letter, a federal crime. It does not matter if the money is completely clean. It does not matter if you earned every cent of it legally, inherited it legally, received it as a gift legally. If you deliberately break it into smaller amounts, specifically to stay under the $10,000 reporting line, you have committed a federal offense. The penalties are severe. For amounts under $100,000 in a 12-month period, a person can face up to 5 years in federal prison and up to $250,000 in fines. Above that amount, the penalties are even higher, and in both cases, the government has the authority to seize the money through civil forfeiture, meaning They can take it before you are ever convicted of anything. The IRS conducted a study that found 91% of structuring cases involve money that was completely legal. 91%. 9 out of 10 people who had their money seized for structuring were not criminals. They were ordinary people who got bad advice and thought they were being careful. Dorothy's neighbor thought she was helping. She nearly cost Dorothy everything. The third thing you need to understand is that there is a second kind of report with no dollar amount at all. Most people think the $10,000 rule is the only thing banks watch for. It is not. Banks also file what is called a suspicious activity report. And this one is far more serious for a very specific reason. There is no minimum amount required to trigger it. A bank can file a suspicious activity report on a $500 transaction, a $200 transaction. There is no flaw. What triggers it is not the size of the transaction, it is the pattern of behavior. The bank's software looks for exactly the kind of thing people think is clever. 9,000 deposited on Monday, 8,000 on Wednesday, 9,500 the following Monday. The system does not see 3 ordinary deposits. It sees a pattern that matches known structuring behavior and it flags it automatically. And here is what makes this especially serious. Federal law prohibits the bank from telling you that this report has been filed. It is actually a crime for a bank employee to inform a customer that a suspicious activity report was filed against them. So you could be flagged right now and have no idea at all. The currency transaction report is routine. The suspicious activity report is targeted. And the difference between triggering one versus the other often comes down to a single decision about how you handle your own money. The fourth thing you need to understand is what the most common situations actually look like. The first situation is receiving a large gift from your family. If your children or grandchildren give you money, even a large amount, that is not taxable income to you as the recipient. In 2025, a person can give up to $19,000 per recipient per year without any special filing requirement at all. And even above that amount, it is the person giving the gift who has a reporting obligation, not you. You deposit the full amount in one transaction. You have your family member write a simple one-paragraph letter stating their name, your name, the amount, the date, and that it is a gift with no expectation of repayment, and you keep that letter in a safe place. That is your entire protection. The second situation is moving your own money between accounts. This is the one that surprises people most. If you are consolidating accounts after a spouse passes away, or if you are moving savings to a bank that offers a better interest rate, or if you are simply simplifying your finances, move the full amount in a single transfer. Keep your bank statement from the original account and your confirmation from the receiving account. One move, clean records, no pattern to flag. The third situation is receiving an inheritance. If a family member leaves you money from their estate, there is no federal inheritance tax for the vast majority of Americans. The estate tax exemption is currently over $13 million. Unless the person who passed away was extraordinarily wealthy, there is no tax on what you receive. You deposit the full amount, you keep a copy of the will or the settlement letter from the estate, and that documentation proves exactly where the money came from. The fourth situation is a lump sum Social Security payment. If you delayed filing for Social Security and receive a retroactive payment covering several months of benefits, That payment can easily exceed $10,000. When it arrives, a currency transaction report will be filed. That is fine. It is completely routine. The Social Security Administration has records of every payment. Your bank has records of the deposit. Everything matches automatically. The worst thing you can do in that moment is panic and start moving the money around. Leave it exactly where it is. The fifth thing you need to understand is what to say and what never to say at the bank window. When a teller asks you about a large deposit, and they may ask because they are trained to, answer in one sentence: I sold my car. This is a gift from my daughter. I am closing an old account. One sentence. If you have a document, hand it over. Then stop talking. What you must never say is anything that suggests you are thinking about the report. Never say anything like, I want to avoid being flagged. Never ask if this is going to trigger something. Never offer to split the deposit into smaller amounts. Those words and that behavior can be included in a report narrative, and they transform a routine transaction into something that looks deliberately evasive. If you ever receive a letter or a phone call from a federal agency asking about your banking activity, you do not answer questions alone. You do not sign anything. You do not try to explain yourself on the spot. You say 5 words. I would like an attorney. That is your right. Use it before you say anything else. The one thing you can do today that protects you for the rest of your life is simple. Create a folder. It can be a physical folder in a drawer or a folder on your computer or phone. Label it Transaction Records. Every time you make a deposit of any significant amount, put 4 things in that folder. First, a single sentence describing where the money came from and the date. Second, whatever supporting document you have, a gift letter, a bill of sale, an estate settlement document, a Social Security award letter. Third, your bank statement showing the deposit. Fourth, any transfer confirmation if you moved money between your own accounts. You will probably never need that folder, but if someone ever questions a deposit from 2 or 3 years ago, you will be very glad it took you 5 minutes to put it together. The report is not the danger. The crime is trying to avoid the report. Deposit your money in full, keep your records clean, and never break up a deposit to stay under a threshold, no matter who tells you that is the smart thing to do. Drop a comment right now and tell me your age and what city or state you are watching from. I read every single comment. And if you have ever made a large deposit and wondered whether you handled it correctly, tell me about it below. Real questions from real people shape exactly what I cover next. And if someone in your life is handling large amounts of cash, a parent, a spouse, a neighbor, a friend, send them this video. 20 minutes of information now could save them years of serious trouble later.